gold has reached a critical level in this most recent sell-off. We're going to look at the chart today. This line has to hold for the gold bulls. What is it? What's going to happen next? And we're going to look at the number one factor that's driving down the gold price. We're going to look at the dollar. What's happening in the dollar? And most importantly, I'm going to show you an ultra long-term chart today that everybody should know, but nobody's talking about right now at the moment. It'll come later. This chart will explain to you why gold is going to go to $10,000 an ounce in this super cycle. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hi, my name is Danny Wilhelmi, and let's start off with a housekeeping real quick. This is supposed to be Wednesday, so this is supposed to be Hot Dividend Winners Day, where we talk about dividend stocks. But as I've said before, if urgent market situations comes up, we're going to bump the dividend show a day or two. Well, there are not many more urgent situations than what we're seeing right now in gold and in silver and in oil, by the way. But we're going to focus on gold today. So if you're new to the channel, hit the subscribe button, help us out, help yourself out, and let's jump right into it. As you can see right now, we are reaching absolute critical levels in gold. As I told you before, in previous shows last week, I drew in this line at 2,415. All right, it's a tad low, but it doesn't matter. You remember. And I said, if we go below this blue line, we're going to have a massive sell-off and we're going to retest the lows. That is exactly what's happening right now. So I can take this one off. In yesterday's show, I said, now this line right here, the low, the close on the low, is the new most important line in gold. This needs to hold on the close. If we make a new close on the low, we're going to go to 4,000, and I believe we're going to go below $4,000 an ounce. An undercut, liquidity grab. If you watch the videos, you know the story. As you can see right now, in European trading, the gold price is fighting with this line like its life depends on it. And it kind of does. We have not made a new intraday low, but that may soon happen. The intraday low, so cutting below this low right here, which is almost exactly on the upper end of this support zone that I had defined a month ago that held up perfectly here. We have not undercut this, but this is not that important. The close is what's important. And then we also want to look at the candle. What kind of candle is it going to be? Is it a candle like this one right here, where we closed almost at the bottom? Is it a candle like it would be right here, meaning nothing is really going to happen in the US trading? We're going to get a new close on a new low, on a new 6-month low, and we close in like the top or the bottom 25% of this candle. That would be double bearish, right? That would be very different than a candle like this one, where we went down intraday sharply, but made it all back and then closed in the top 25% of the candle. That's actually bullish. Not super bullish because we still closed obviously in the red for the day, but we made up all these intraday gains. So that's why the intraday part is not that important to me, right? There's a lot of possibilities in intraday where the institutions will just try to undercut you and do liquidity grabs. We're going to watch at the close and what the candle does. Now, the number one reason for the movement in the dollar in the gold price has been the dollar. I've been telling you this for weeks now, for a month now. I've been telling you, hey, something is happening in the dollar. So let's take a look at the Dixie. And boy, whew, man, look at the breakout in the Dixie. Yes, we overbought in the RSI, but we just had a breakout. And everybody who has been dollar short needs to cover, because we were at this resistance zone that has held up, as you can see, in the past 14 months. We doinked off it, doink, 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 4 times, 5 times if you count this. So obviously there were a lot of people short here. Made sense. But then we broke out. And now we got room to run. And the area that I had told you before, if you have watched the videos, that I see it somewhere around here. So somewhere around 103 to 104. This is where I think the dollar will run now. So, that will put pressure on the gold price. And you want to know how it's possible to get gold below 4,000, even if it's just for a short undercut and liquidity grab. This is it. Now, does that mean that we're going to start a new dollar bull market? Which, if that is the case, obviously we will talk about much lower prices in gold. And I don't believe so. And let me show you the chart that everybody should know. Not only the gold bulls, and I'm one of them, as you know, but also FX investors, commodity investors. Hell, if you're an American and you want to take a vacation in Europe, you should know this chart. And this is the ultra long chart of the Dixie since 1985. So we're talking 40 years. And as you can see, this is what you just saw on the daily right here. And now we have the monthly ultra long-term chart. And look at this downtrend that has been established numerous times in the dollar. We are reaching the final stage of a dollar appreciation that has been, with crazy waves, no doubt, has been in place since March 2008. So, for 18 years, we have seen the dollar rise. Again, with wild corrections, but we have gone up, we have made higher lows and higher highs. We are ready for the next big devaluation of the dollar. Now, a lot of people thought it would start right here in the beginning of 2026. And I'll get into it on the daily too, but you can see it here. We undercut it a little bit, this uptrend. And probably parts of the gold price appreciation was central banks panic buying and probably hedge funds and big institutions front running the possibility of a breakdown and buying gold. Didn't happen. We did the exact opposite. As you know, we're going up, which one of the reasons why gold is correcting. But we are near the tippy top of this, again, 40-year-long downtrend in the dollar. And the next devaluation phase of the dollar is coming. So if you want to go to Europe, if you're on a vacation in Europe, within the next 2 years, will probably be the cheapest as far as the currencies are concerned in your lifetime, in my lifetime, that you will get a chance to come over to the old continent. Because as you can see, these moves, these price moves, they last for a long time. This was only 6 years. This was 18 years. This year was 9 years. So we're talking at least half a decade, could easily be a decade. And if you want to know how gold gets to 10,000, this is the chart. This is it. And we already see the central banks around the world front running this development. They're also causing it, obviously, by selling the dollars, by selling US treasuries, but they're clearly front running it by buying gold. As you know now, gold has overtaken the dollar as the number one currency in the central bank portfolios globally. And this is the reason why. Nobody wants to hold the dollar. And if you look at this chart, it's absolutely clear why. They want to hold gold because of the negative correlation and obviously other things like the debt crisis and everything. But we're talking about the FX market here. So that shows us that really, if the dollar goes bananas, it could go all the way up to the upper end of this downward channel, which is, to make it very easy, around 107. That is the area where we would doink off the upper end of the channel. Now, let me flip back to the daily. As you see, since 2022, we had 2 false breakouts, so we could even go a little higher. But I'm not so sure. If you look at this part right here, 2022 to 2025, for, yes, it's a longer time, with kind of a similar situation than we're in right now, right? We're in a correction phase. We had this massive resistance zone that the Dixie doinked off numerous times over the span of 2 years. And then we broke out and everybody said, yeah, this is it. Now, here we go. Monster dollar bull is coming. Obviously, this coincided with Trump winning the election. We also saw correction in gold and the gold miners. Makes sense now if you see this chart. But then what happened? Giant fake out, giant bull trap, and we actually went lower. Went a lot lower, all the way to the uptrend that I just showed you, and that was what stopped it. And then we started doing this bottoming formation. Yes, we could go down to around 107 again, just to make it easy. One number that we're going to keep in mind, because we don't know if the Dixie gets up here and when it gets up here. So 107 is kind of what we keep in mind, which is about 6% upside. That's a lot in FX. Doesn't sound like much. If you invest in a stock like SpaceX or Palantir or whatever, in FX, that's a lot. But this scenario could also be in order. So meaning we run up to 103, 104, everybody's like, oh, the dollar, it's gonna go higher. And then it fakes out everybody and we break down already, even before we ever get to the exact upper end of the downward channel. Remember, the market likes to fake out the most amount of people. The biggest fake out we could get is if the dollar goes higher now, so everybody's jumping on the dollar bandwagon, then people will start to look at the chart that you just saw. They're not looking at it now, they will look at it then and say, well, I'm going to sell my positions around 107 and going to go short. And then the dollar never gets there and just reverses and does exactly what we saw in 2025. And if you remember, wait a minute, 2025, big rally in gold. That's where it came from. So either way, the dollar's going lower. Maybe with an early fake out, maybe it wants to really retest a downtrend, which, by the way, would mean that we're going to go a lot lower in gold, short term. then we would probably actually see an undercut of 3,500. But we're not there yet. The most important thing for us to understand is, yes, what you see right here looks good short term to medium term. But if we look at the long-term picture, this is it. This is the final stand of the dollar. This is the final rally before we get the next big leg down in the dollar, which will then push up the gold price. That is it for today. Again, if nothing crazy happens, who knows in these markets? I could have done like 4 videos today on 4 different topics. Tomorrow will be the dividend show. Maybe we'll have to push it to Friday, maybe even to Saturday, but you're going to get it this week because it's a weekly show. That's it for today. Have a great day. Talk to you tomorrow. Bye-bye.